Good morning, traders, and welcome to the Inner Circle. My name is Gary Fickard, and I am going to be the host of the Inner Circle. I am extremely pumped to get started today, and we've got a bunch of traders coming in, experts like we've got Chief, we've got Tad coming in, we've got Abe coming in as well today. So a lot of good fun going on. Now I have got my notes, so if I'm reading my notes, it's because I'm getting old and I need to review my notes. All right. So we've got a couple of things that I need to go ahead and talk about today. The one thing is we want to make sure that we set the right expectation, because I don't want you coming in here thinking that this is the way we're going to be running the show and we're moving in a totally different direction. So let's set the expectations right up front so we know exactly what we're expecting. Firstly, number one, you've joined the Inner Circle for one reason, and if you say anything else, it's all about the money, right? So if you say anything else, it's not quite there. It's all about the money. So if we're going to go ahead and take a look at the Inner Circle and what the show really is going to be able to do for you as a trader is, well, I'm going to be focused on trading opportunities every single day. We're going to look at trade opportunities. I'm going to go ahead and create a trading strategy that's based on different strategies that we teach here at Market Traders. I'm going to be using the SSL. I'm going to be using, which for those that don't know, it is the sentiment strength line. Plus, as well, I'm going to use target trading pivot points. I'm going to use the wave counts, the market cycles to determine the trend of the market. We're going to combine all this information and we're going to build up a trading strategy that we're going to actually follow each and every day. Hopefully, by the end of the day, you'll be able to have good direction as to where the market's going to go, where to enter, where not to enter, which trades to follow, which trades not to follow. Now, it's not all about me and about my opinion about the market, but it's also about bringing experts in and hearing about them too, and hearing what they think the markets are going to do. Now, I may disagree, you may disagree, and so let's all agree that we will disagree. But the fact is that everyone trades differently, and that's the key right here. Everyone trades differently. So whether I'm selling the market short on a particular currency pair, or I have Josh or Abe doing something different, it means they've seen the market differently, and I think it's important for us to listen to their views and how they analyze the market. Excuse me. So let's go ahead and do this. Let's go ahead and get started, because what we're going to go ahead and do is we're going to follow a strategy like what I like to call is the high probability strategy, which again, like I said, we're going to combine different strategies and create a trading strategy that we're going to follow each day. Now, with that being said, again, I'm using different charts, different tools to create these trading ideas. I'm going to use the MPD, which is the SSL, which is part of the momentum breakout class. I'm going to use the wave count cycles to identify trend direction, and I'm also going to go ahead and use the target trading weekly targets. I'm going to use the weekly targets, which are pivot points, to identify whether the market's in a retracement or an extension. All right, we want to see where the sentiments lie, either it's bullish or it's bearish. So with that being said, let's go ahead and get started, because I've got 30 minutes to get this segment down, and I want to let you know this. We have a tight schedule, so I'm going to get through what we need to get through. We're going to make sure we stay on point, we stay on our schedule. We've got a great schedule ahead of us, but we've got to make sure we stay on task. All right, number one. Number two, also what's very important is, I know that for those that are probably wondering right now, where's the chat box? Why can't I put my question in? Well, we definitely want to hear your questions, all right? We definitely want to hear your questions, but because we've got a tight schedule, and because we want to stay with the schedules and respect your time, we haven't included a chat box, but we definitely want your questions to be answered. So we'll be giving you tomorrow, we'll be giving you a link of an email address that you can send questions to. But also what we're going to be doing is we're going to give you a link inside the online university that can give you access to a site where you can go ahead and post questions. Now, the beauty of that is other traders can go ahead and vote your questions up, which means that if you've got a very good question that you've gone ahead and posted, and all questions are good, I get it, but if your question's really resonating with a lot of students, they can go ahead and vote that question up, which means that we'll go ahead and take the top 10 questions for this week, and in next week's session, we're going to go ahead and address all those questions. We're going to go to each question, we're going to address them within the different segments, all right? So we definitely want to get your questions. Now, for those questions that are below the top 10, we will address those questions too via email. If it does not get responded via email, now I've said this to my target trading students, if you send me a 10-page essay on something you want, expect at least 10 weeks for me to get back to you. All right? So if you want to keep your questions very short, very simple, we can get to those questions very quickly. But if you have questions that need a little more urgency, need to be addressed with a little bit more urgency, I do advise that you reach out to the account rep, speak to your support. They will definitely be able to help you a lot quicker if we can't get to that email a lot quicker than what you expect or what you want. All right, so we want to make sure we get those questions answered because we're here to help you. Again, it's not about me, it's not about the experts, it's about what we deliver to you, and we want to make sure we deliver a good message and that you take these sessions and you learn from these sessions each and every day so that you can improve your trading. Now, traders, with that being said, let's go ahead and jump into the actual schedule. All right, and we're going to jump in. First, you're going to go ahead and get our feet wet with some market analysis. All right, we're going to go ahead and take a look at the market. We're going to look at some pairs. But again, this is just going to be a little bit of a guideline as to what we're going to be doing each day. Now, we're going to go into a lot more detail tomorrow when we actually officially start the session off with some trading. So we'll do that, but I'm going to give you a quick understanding exactly how we're going to be able to trade the market and what I'm looking for. So let's go ahead and jump to the market right now. All right, so I'm going to go ahead and open up my chart right here, as you can see on the screen. And I'm going to go into, let's go ahead and grab the first currency pair, which is on the far left here, the Aussie US dollar. In fact, you know what I want to do? Because we had some bullish move in the Euro pairs this morning, let's go ahead and grab some European pairs. And let me go ahead and jump into the Euro JPY, because I say Euro JPY because I know there's a lot of traders right now currently that are holding on to the Euro JPY and they are selling the Euro JPY. Well, let's go ahead and review exactly what the Euro JPY has done in the last couple of hours. Now, you'll notice on the chart, I have two charts. That's it, and keeping it simple, two charts. I'm going to be looking at the daily chart with an SSL chart. Now, the SSL chart is going to give me a much better view as to how the market is going to be identifying turning points. Now, I'm also using, on this particular chart, I'm also using the wave count to identify where I'm expecting the market to turn, because what the wave count does for me is it identifies the major turning points in the market. And then what I do is I use the SSL chart to identify when the sentiment has changed, whether it's been bullish for a while and now turned bearish. And if I'm showing that the market, based on wave counts, is anticipating a bearish move, and we have a change of sentiment from bullish to bearish, this is hot. All right, this is what we're looking for right here. So this is the deal. If you take a look here at the daily chart, and you notice on my daily chart that I do have the wave count, and we're in the fourth wave at the moment right now. Now, with us being in the fourth wave, notice that we haven't had a change in the market sentiment. Now, for those that don't know what that means, well, currently we've got green candles, all right? And with the green candles, it's indicating that the market's currently bullish. So this is the deal. If the market is bullish right now, then what I need to do is I need to wait for it to go ahead and change sentiment. And when it changes sentiment, I then am going to then look at the lower time frame and identify a trading opportunity based off of 1 hour. Now, this is what we're going to do. We're going to find sentiment, and we're going to find direction. Once we've established that, we're now going to move into the lower time frame, like the 1 hour. If you look at my chart again, look at the 1 hour right here. I'm going to blow it up, not literally blow it up, but I'm going to blow that up in the sense of zoom in and take a look here. So here we have the 1 hour chart. On this chart, you'll notice that I have pivot points, all right? And these pivot points are identifying sentiment for me as well. Whether it's short-term sentiment, it's important, because if I compress the charts, you'll notice something right here. Notice how, and this is a beautiful picture. If you want to see a beautiful picture, this is it when it comes to trading. Take a look at these lines that you see right here. These pivot points are above the market. And what does that mean? That means we have a bearish trend, which it means bearish sentiment, right? Look how these pivot points start moving below the market, right? They start supporting the market as the market starts trending back up, which means that the trend is now bullish, all right? So currently right now in the short term, we're seeing bullish rallies. And this lines up exactly what we're seeing right now on the daily time frame as well. I'm going to go back to the daily time frame, and I'm going to go ahead and show you this right here. Take a look. So you can see this bullish move that we've seen right here is identified by this bullish sentiment that we've seen on the 1 hour time frame. Now this is very important, guys. Seriously, put down the popcorn and the Coke right now. Grab a pen and paper, because this is what you need to do. Take these notes down, because market sentiment direction is vitally important. If you've got market direction, it makes trading a lot more easier. All right. When you know exactly where the market's going to turn, where the turning points are in the market, it's going to help you be able to trade more successfully and be able to get you in better trades. All right. Now I get it. There's different types of trading strategies, like cost averaging strategy, which we also going to apply in our trading as well. When we start tomorrow, we're going to be talking about cost averaging strategy, because this is what I'm going to be using in this strategy when we look at these trade setups. There's two types of setups I'm looking for. Number one, I'm going to be looking for a trend setup, and I'm also going to look for counter setup. I'm going to trade both counter and trend. I'm going to use the wave count and the SSL chart to be able to identify trend direction, and then I'm going to go ahead and trade the shorter time frame based on ABCDs, all right, in that direction of that current trend. But I'm also going to trade some counter moves. You know, when the market moves in the opposite direction to the trend, I'm going to trade those counter moves too, which I'm going to use the pivot points and identify the retracement points as that tool. Now, let's go back into what we're currently looking for right here. This is the chart. So right now, if I had to take a look at the Euro JPY, now I know that I've got a couple of traders out there that are stuck on the Euro JPY. And I'm one of those traders. I'm at the moment right now, I'm short JPY, and I'm holding on to those shorts. And the reason why I'm holding on to those shorts, sounds like I'm hanging on to my shorts, but the reason why I'm hanging on to those short positions is this. I'm waiting very patiently for the daily chart to change sentiment. Right now, I can see that we're still bullish right now. So I'm not concerned, because I know we're getting to a point where the market's going to find resistance and start heading south. And with that being the case, I need to go ahead and prepare myself, get ready, because what's going to happen is the market at some point is going to start turning around. And when it does, that's when we're going to see where the smart money is going. Right now, let's go ahead and take a look at the 1 hour chart. The 1 hour chart, and this is something I want to go ahead and show you as well. I'm going to show you a spreadsheet. And by the way, you're going to be able to have access to the spreadsheet as well. All right? This spreadsheet is identifying everything that I've just told you right now. And you're going to have access to the spreadsheet. All right? It's available in your online university, and it's marked off as, I believe, the Inner Circle the big picture. Now, you're going to have access to the spreadsheet, which I know some of you have already accessed the spreadsheet. But I want to make sure that everyone understands what I'm doing on the spreadsheet, because if you don't understand the spreadsheet, you're going to be completely lost. So on the spreadsheet, what I'm going to be doing is, if we take a look at the Euro JPY right here, notice that I've said there bullish fourth wave, and I said stand aside. All right. So here it is, bullish fourth wave, and then stand aside, and I've said hit target and then mix. Now let's go ahead and review each one of these. Now bullish wave 4. Let's go back to the charts. Bullish wave 4 means that, take a look right here. We are in a corrective move. All right. This wave 4 is a corrective move, which means that we have to be bullish if the trend's bearish, right? So the trend's overall bearish, but because we're in a corrective move, wave 4, we're in a bullish move right now. And the reason why I've gone ahead and said right here, stand aside. Look over here. It says the Euro JPY. I said stand aside. Reason why I say stand aside? Because the market sentiment has not turned yet. I said stand aside because I'm waiting for market sentiment. As soon as I get a change in market sentiment, I'm then going to go ahead and start looking for selling on the lower time frame. Right now, market sentiment says that if we're not already bullish, we should have been bullish, and we should be staying in the trade bullish until market sentiment change. Now, I did say that, hey, we are looking at a change of market trend because we're in that fourth wave. It hasn't happened yet, but it's going to happen. It's getting to a point of resistance. Now, this is the deal. Going back to the spreadsheet. All right, oops, wrong spreadsheet. Back to the spreadsheet right here. Here we go. You notice over here under the weekly targets, and then we have news direction. Now, I've got here under the weekly targets, I've identified whether or not we've hit that target for the week. You know, if the markets hit that support or that resistance level for the week, I'm going to go ahead and mark it off because, as I said earlier on, these levels, these pivot points are levels of support and resistance for the market. So if we hit support, it means that the market's going to continue to rally. When we trade below support, which means we trade below the pivot points, we're then going to go ahead and start looking for selling because those pivot points are then going to become resistance. So when I say here under the Euro JPY that we've hit the target, that means I don't have really any counter trading opportunity. And so when I look at this, I say hit target means there's no counter opportunity. Now you can see there are a couple of targets that I've said unhit above, unhit below. That means that if I don't have a trending opportunity, I may have a counter trade opportunity. So take a look at this right here. This spreadsheet is going to be able to, from a glance, be able to tell you whether I'm going to be trending the market or whether I'm going to be trading a corrective move. And don't worry, if you're not getting it yet, that's okay. This has been recorded. You can go back and review this again. But most important, the take from this is to know that we will be going through this every single week. We're going to be drilling through this every single week. We'll be identifying the trade opportunities, whether it's trending trades or counter trades, but we will be looking for those trading opportunities. Now, this is the deal right here. I'm going to go back now to the trading opportunities. When we look at the trading opportunities on these particular trades, I'm going to apply also a cost averaging strategy. Now, what is a cost averaging strategy? All right, what a cost averaging strategy is we're going to be taking multiple positions on. Now, traders, man, I have to say this because I've seen it more times than not. You have to be really careful with cost averaging strategies. All right, it can be extremely profitable. All right, but at the same time, it can be extremely detrimental to your trading account, which means if you're not going to manage your positions, which means you trade way too many positions that you can afford to, number one. Number two, you go ahead and you apply risk on your trade that is way high at the start. When you apply cost averaging strategies, you have to go ahead and make sure that you start off with low risk, very low risk in the beginning, all right? Because it's not about hitting those home runs on your first trade. It's about building up the trade, all right? Getting to first base, second base, third base, and then fourth base. And I know there's no fifth and sixth base in baseball, but the point is we have more levels that we're going to be probably adding to that. And by building up your trade, it's helping us to increase the margin of error. Because how many times has it happened to you, right? Think about it right now. How many times has it happened to you where you get in on a trade, you think you got the perfect trade, you put your stop above that U-turn, and then boom, the market comes out with a news report or whatever it is, and it pops you. You get stopped out. You take a loss, right? And you're like, man, why? Because what's just happened now, the market's turned around again and gone in your favor, but you're not in on the trade. It's gone in the same direction you were trading, but you're not in it. You're not in that trade. Listen here. That's the error. That's the increase in the error of the margin of error. Increasing the margin of error means that, hey, if you don't get it the first time, you have a second, third time to make right. But an important thing is equity management. We have to be able to manage that. All right, let's go into a couple of more pairs right here and take a look at a couple of more pairs. And again, remember, we're just getting a little feel. This is just to get you a little feel as to how we're going to be approaching this every day, because come tomorrow, you better get ready, guns holstered, ready to fire. And what we need to do is we need to make sure that when I start tomorrow and I start looking at these trade setups, you're going to already know what we're going to be looking for and how we're going to be approaching the market. All right. So when I go to currency pair, and let's go take a quick view at one currency pair right here, and I'm going to shoot to, let's say, let's jump back at the Aussie US dollar. All right. Now, Aussie US dollar, if I take a look at the chart right here, just right off the bat, right from the get-go right here, we can already identify that, hey, we've got a bit of consolidation here. We've got the market trading within a trend, a slight upward trend. But we do see that we've hit a bit of resistance on the top. All right, we've hit a bit of resistance on the top, and the market's come back down to support down here, or at least it's coming back down to support right here. Now, you can see that we have a bearish sentiment, all right? The Aussie US dollar is bearish, but it's been bearish for a while. Traders, I don't want you to get into those type of trades, because what's going to happen is the market's going to stop and it's going to start reversing, all right? And you can see here, if I look at the 1 hour chart, see how the 1 hour chart is completing a smaller degree wave structure? And what it's doing now is it's starting to retrace back deeper. So we start to see a deeper retracement. Now that means that we're still bearish overall, but it just means that we're now in a corrective move. Look at these pivot points. Let me enlarge this a little bit so you can see right here. You see these pivot points? Notice how the market's now trading above the pivot points. So what is that telling you? You should, by just looking at the chart, identify that, hey, we could be seeing some upside move in Aussie US dollar. So if you're a scalper right now and you're not following what the strategies I'm following, and you're a scalper, this is going to help you as well. Because now you can go ahead and start thinking about buying Aussie US dollar bullish, because we're in a bullish correction. And again, when I say correction, it's because I'm looking at the bigger picture. All right, I'm looking at the bigger picture. So right now we're in a bullish correction. All right, let's go in. So if we go back to another chart right here and do a quick view on another chart, EuroCAD. And we look at the EuroCAD right now, and we see right off the bat, we can see that, hey, this is a bearish move right here. In fact, we've got a bearish move. So the sentiment is bearish on EuroCAD. Look at the 1 hour. The 1 hour, we should be looking to sell the market short on the 1 hour. So at the moment right now, there would be good sells on the EuroCAD, all right, EuroCAD, looking for the market to move down towards its target down here at 146.24. So EuroCAD. So I would probably be bearish EuroCAD as we start looking for the sell-offs to EuroCAD. Now, traders, once again, we're going to go into these details tomorrow. I wanted to give you just a kickstart as to what we will be looking for and how we'll be setting things up. And I want to prepare you and get you ready for tomorrow and the days after. So with that being said, let's go ahead and we're going to take another break. We're going to take a 5-minute break. I know everyone needs those potty breaks, all right? So we're going to give you a 5-minute break. And when we come back from the break, we're going to bring in Abe. And Abe's going to be able to show us a little bit about, or not show us, but be able to tell us a little bit about the fundamentals this week and a couple of weeks back then, and explain to us what the markets are doing, because we did see some rally this morning. But let's find out the why behind the technical move. All right? So with that being said, traders, I know you need a party break. I do need a party break myself. So let's go ahead and take that break. We'll see you back in about 5 minutes, and we'll have Abe joining us then. Thank you. Alrighty, traders, welcome back. I'm so glad you're back, and we are going to be speaking with Abe Kofnes. Abe Kofnes, welcome to the show.
Glad to be here.
Good. And Abe is our senior fundamental analyst, and we're going to go ahead and talk about fundamentals. Now, Abe, the one thing that I've seen in the markets right now is that it takes a lot of research and and reading up on news to be able to know the fundamentals really well. And that's one thing that you do extremely well. I mean, you spend a lot of time doing that and preparing, right?
Oh, absolutely. Over a period of time, it takes time to build up a knowledge base.
Yes, yeah, that's true. Now, the one thing, and which is not an easy job. Now, I have many questions, and I think let's go ahead and talk about the one question that I think a lot of traders have in their mind right now is, and I've looked at the news, and I cannot find any news that reports what happened to the euro this morning. What happened to the euro this morning?
Okay, let me give you my impression of what's going on. First of all, in fundamental analysis, you have to compare, you have to have longer term expectations few weeks down the road that are economic, on inflation, on GDP, on growth, and the short term is more psychological and geopolitical. So what's happening with the euro, it really extends over from the French election. The French election created a optimism on Eurozone recovery, that the political risk, uncertainty, the premium that was there has been, what's called tail risk, is off. So it was a rally, but the euro is getting to sustain that rally for another reason, still a political reason. President Macron is merging with the prime minister, with the leader of Merkel, leader of Germany, and they're indicating that they're going to be very aggressive on Eurozone recovery, reform. So that is still a political rally. The reason I'm saying is it's a shorter term rally. It's responsible for two things. One is, of course, the dollar weakness is helping the euro. A little bit, we'll get into that, a little Trump anxiety.
Right.
But the other darker cloud over the euro is the fact that the ECB, the European Central Bank, is not talking about stimulus, reducing stimulus. They're spending 60 billion euros a month until December. They're at 0% interest rate. And the real big problem on the euro is the headwinds on unemployment. It's like 9.5%. So there is, I think next month is going to be hard for the euro to stay strong. But you can't have these rallies that are not fundamentally wrong. They're more psychological.
Are you saying that we're not going to, are you saying that the rallies will continue for the rest of the month? Or are you saying that we could start seeing a turnaround on the euro rallies?
I think you're going to see a turnaround because they don't have enough fundamental energy to justify it. So I expect the technicals to start reflecting the fact that the fundamentals are saying euro can't be that strong. I agree. So I'm bearish on the euro, but keep in mind that is also due to expectation that the dollar is in a pause and going to get a bit stronger.
All right. Well, that's good. All right, well, if you take a look over here, now, if you go ahead and take a look at my technicals, take a look at the chart right here and look at the technicals right here. Now, you're going to be extremely happy with this because I'm using the SSL chart.
Well, fantastic.
Yeah, you see, it took some time and I eventually changed over, all right? So I'm turning to the dark side right now, all right? So if you take a look at the Euro chart right here and I look at the Euro CAD, I've seen that the Euro CAD has already shown sentiment change. Although this rally I'm seeing at the moment right now could just be a corrective rally, a relief rally, but it's not going to withhold. I'm also seeing that, of course, when we're going to talk about the oil price as well and how oil price is going to affect the markets too. But if I look at the Euro CAD right now, I'm seeing this as a very overbought situation. Very overbought, looking for the Euro CAD to start selling off. Now, if you're right by what you said about possibly a U-turn in the euro, and the euro cannot be strong too long, then this could be well in line with my technical analysis.
I have a caveat for you.
Throw it out.
You happen to pick one of the more complicated pairs, and with a Canadian, which has a lot of influences on it. The fact is that oil has spurred up because of the Saudi and Russians coming together and announcing the other day that they're going to do a limit on production. And then OPEC on May 25th is going to have another meeting. So oil is now getting a stronger lift. Also, IMF is expecting a really strong growth in the global economy, 3.5% this coming year. So oil looks like it's positioned to be stronger. Now, if oil is stronger, it's going to pull down the Euro CAD. Now we have is a race to the bottom. We have weakness in the euro. Right now, the euro is more bullish than the CAD, but weakness in the euro, strength in the CAD. So I think the idea of a sell-off is a little harder to do. It's more likely to go into a slow sell-off sideways pattern because you have a battle of two weakening fundamental forces.
All right, so you're saying oil's going to weaken a little bit?
No, oil's getting stronger, therefore it's strengthening the CAD against the euro.
Right. So the strength of the CAD against the euro's going to dip.
That's right, against the CAD, but the euro is
the euro's
getting
going to be U-turning?
Euro is getting weaker. So you have a skew to the weak side. That's right. But oil may be temporary, and that's the point.
It doesn't temporary rally?
Yeah, it doesn't have to be. It's not going to be a strong fundamental rally. Oil is likely to be in a 42 to 55 range. So keep an eye on that. This may simply be psychological rally in the oil, so it's a temporary strength in the CAD.
This is what I've got set up on the oil chart. If you take a look at the oil chart right here, we've got bullish sentiment already formed on the daily. So we've got bullish sentiment. We've hit bottom support right here. Okay. We're looking for the market to go up to around about $56 a barrel. If I look at my technicals at the moment right now, I do agree. We do have a missed target, or not a missed target. We have an unhit target on the pivot points down at 47.19, which means that there could be a dip before the rally takes place, but I'm looking at least 50 to come into play.
I think it's exactly calibrated with fundamental expectations. Qatar, one of the key banks in the Middle East, even 6-7 months ago, expected a forecast of 55 oil as the equilibrium price. They're going to keep oil in 50 to 55. Anytime it goes to around low 40s or threatens it, you're going to see an attempt by OPEC. OPEC is not dead. Sure. So I think the caution here is that the strength in the CAD, if it's coming from oil, is a temporary strength, because it may be a reaction to jawboning, to speaking, and until May 25th, we really don't know what OPEC is going to do. So I'd be very cautious on that in terms of longer-term extension forecasts on trading strategies. The other fact about the Canadian, may I add, is that you got the Trump anxiety factor, you got NAFTA uncertainty, you got the beginning of trade tensions, lumber tariff was introduced. So even the central bank in Canada is noting tension and uncertainty from the trading side. Mm-hmm. And they're 80% trading with the U.S. So you got a risk premium that says Canadian currency is complicated. It has some bearish influences that you may not be anticipating.
Okay. All right, good. Well, this is the take I'm taking from this, right? This is my approach from a technical perspective. I'm going to possibly look at looking to continue to buy oil, which means I'm going to be buying Canadian. All right, I'm going to be strong Canadian. But again, like Abe said, this could be temporary. So any sort of weakness that we see in Canada, if I look from the technicals, it may be just a short-term weakness with a mid-term rally. But in long term, I'm still seeing $56 a barrel on oil, though.
Okay. Well, I totally understand that. It's possible. The key is if you see oil going up that much, it's really an implied bet on the dollar. And if the dollar is implied here that the dollar is not going to get higher, then oil and the dollar can't go up at the same time for too long. So it's an interesting conflict. If you see oil being stronger, mm-hmm. then you are making an implied bet that the dollar will be weaker.
Right.
And with the rates coming up on June 23rd, late June, FOMC raising rates, things may change in June on expectations on the dollar.
Wow. Okay.
Yeah. So we have you might be right for the next few weeks.
Yeah, right. Absolutely. That's when we're referring to dollar movement or any sort of currency movement, we're really looking at the next month, the next 4 weeks ahead of us, and looking for the expectation of what we could expect based on that move.
I think you're right. I think there is the core time frame for fundamentals is about 1 month. Because going beyond that is difficult. Too many things happen. And the actionability is next week. What do we expect next week? Now, why the markets is a perfect point. Markets have been in doldrums, right? A lot of sideways consolidation. Why? Because there's no news driver. Central banks are not acting this week. There's very little news. And any news that's happening is not affecting big currency flows. There's no shock waves coming mm-hmm. this week.
Right.
So you have consolidation patterns.
Sure. Okay, cool. So if we go ahead and pivot towards the pound, Brexit's come out. It's gone ahead and created this big hoo-ha we didn't get quite the moves that the market was expecting. Most of the move actually was corrected. What do you think that we can expect? I know it's a 2-year process, but how could Brexit affect? Now, I know that you said that Brexit is definitely going to affect the markets currently right now.
Yes.
But how is it going to affect us in the 2 years? Are we going to see just? Let me put it this way: will we be able to identify and know ahead of time if anything's going to go ahead and affect the markets based on Brexit?
It's a great question, and there's a definite answer. The answer is yes. Here's what's happening. The big Brexit shock, of course, caused a big wave down, caused consolidation going until the bank in August and September intervened, lowered it. So the sterling went down about 15%, I believe, but then it rallied about 2.5% since then because inflation increased due to imports. Mm-hmm. They imported inflation, they stimulated exports, and they got a problem. And central bank still is at 25%, a 0.25% interest rates. Inflation is a bit higher than they expected, but consumer spending is contracting. They're getting scared. Mm-hmm. And now you have Brexit negotiations where you have financial decisions, location decisions not being made. You have a contraction in GDP. So everybody's forecasting a slower GDP, a slower economy. So what does that mean, actionability? It means the key is inflation. If inflation continues to go up, the bank is now neutral. They're saying, we don't know what we're going to do. We're going to be data dependent. But inflation is the key. Mm-hmm. And the problem is that there's not enough information. So you don't expect a rally in the British pound to be sustainable until there's a reason for that rally, which is expectation that tapering will happen. Now, there's no expectation that in the next 2 years they're going to increase interest rates. It would be extraordinary, because why would you tighten on an economy that is so subject to uncertainty in negotiations? Right. So I see the strategy is a weaker GBP, rallies maybe due to dollar weakness, and on top of that, so sell GBP fundamentally on rallies, but don't expect any strength to be longer term. Okay. So I think the pattern depends upon the central bank statement and the inflation reports.
All right. We are seeing a chart right now. I've just pull up a chart, a pound Aussie chart. Okay. We're already seeing that we're showing bearish sentiment on the daily. All right. Bearish sentiment on the daily. We are seeing down ABCD moves on the 1 hour time frame. We do see market sentiment indicating on the 1 hour that we are in a bearish trend at the moment right now. So everything's pushing to the downside.
Which is pointing to a weaker pound.
Right.
Now, that's interesting. Now, you have, in a cross pair, you have an expectation of two different economies, right? A battle between UK expectations and Aussie. Now, the Aussie is in a very interesting position. Mm-hmm. They didn't increase interest rate, it didn't decrease rates. They're 1.75%, very high. But they're running into a global economy that's getting stronger, so that's good for the Aussie.
The inflation is also up at about 2.1%.
The inflation is a bit up, but then it's transitory because it's due to commodity and oil prices. So it's not a kind of inflation that they expect to be priced into the economy.
Right, there was more the consumer price index that was...
Yeah, and the other thing about the Australia, and I was looking at this pretty deeply, is that you got the mining industry really in bad shape. So you got two economies. You got Sydney, Melbourne, East Coast. You got the West Coast mining. Then you got the China uncertainty. So what's happening in Australia is they got a big problem, which is low wage rate. There's no pressure on wage growth. And that's a secular problem. That's happening everywhere in the world. Nobody is able to press and increase their wage demands. So there's what they call as a phenomenon of underemployment, part-time economy. Here's a number I want you to know about. In 1970, 10% of the Australian economy was part-time. Really? Now it's 30%.
Really?
And this is a big dilemma for central banks to stimulate demand everywhere in the world.
Right.
So the Aussie is okay, it's stable. One interesting fact about the Aussie that you need to know. You know, it's 26% of its trades is with China. The U.S. only 11%. the yen 10%, and New Zealand 4%, the pound 10%, and you have the pound 10%. So what you have here, or the euro 10%.
Right.
So the idea is Australia is trading with the whole world. So when you have IMF saying world's growing, it's good for Australia, but the risk factors are there. So what they're worried about is Trump uncertainty. So I am bearish on the Australian, but mildly bearish. So this is right. This is saying the GBP is not acting strong against the Australian expectations, and I totally agree that that is a good technical.
Now, Aussie and New Zealand, both of them were looking. Well, New Zealand normally follows Aussies, right? And the Aussies were looking to cut rates. They were talking about cutting rates. They held off because of the Trump elections, or at least the presidential elections here in the U.S. They held off because they wanted to see where the market went to before they made decisions on that. They held off on cutting rates. I think they cut once, and New Zealand cut once, and then
they're on the sidelines for a long period of time.
So they're going to stay on the sidelines?
They're going to stay on the sidelines.
So no changes to the rate decisions?
They're going to come and no changes. And in the Kiwi is an interesting situation. There actually has a slowdown in world trade, but they're in a housing bubble. There's big fears going on. Even IMF said, hey, Kiwis, watch it. NZD, you might have a housing bubble which could collapse the economy. So they actually declined against world trade by 5%. So the Kiwi they're trying to do things on housing without affecting the exchange rate. So they are not going to change anything, and they're 1.5%. So you got two economies that have highest rates in the world. Australia 1.75, New Zealand 1.5. But look what's happening. Why are they weaker? Why aren't they very strong? Because the differential with the United States, now we're at 1. By the end of the year, we might be at 1.5. We're going to be in parity in interest rates with the Australian. And also, we're getting closer by eliminating the carry trade difference. Now you're talking about, this is big force. So why would money be attracted to Australia? Less money will be attracted there, and less to New Zealand.
Absolutely.
So we have the elimination of the carry trade with the U.S. dollar getting stronger. Big phenomenon. So we are into some interesting times. But in terms of what's happening, the British pound cannot stay strong. The Australia cannot get stable. And maybe weak. So I think the technicals are showing the right thing.
Very cool. All right, great stuff. Well, again, Trump, he continues to throw out those tweets. And we've just heard the latest there. Trump reveals highly classified intelligence to the Russians. What's up with that? I mean, I didn't see the market react, really. I saw no reaction to the dollar this
well, it's beginning to react.
Well, I've seen Euro rally this morning in the European session, but I never saw any big rally or big move in the dollar.
There's a couple of psychological
divergences.
This
is big news, right?
I'm not sure it's big news, but let me tell you how I interpret it and how traders, I believe, should interpret it. The Trump is like throwing a rock in a lake, and there's a ripple there. But over time, the issue is credibility and psychological credibility. What's happening is you got to ask the question. S&Ps are at historic highs, but it didn't pull up the dollar. Interesting, isn't that? So it's showing that the dollar is not getting the kind of lift it should have in a bull market. So there's a divergence going on. It's a tired dollar. Why? Because the risk factor is now beginning to hit the dollar. The dollar is weaker because of a few things. It's not that what Trump did in itself. It's what the impact will be on his perceived credibility to get tax cuts through, to get fiscal stimulation. And now the market's saying, wait a minute, there was a Trump bump after inauguration, and that's being evaporated because where's the meat, as they used to say, Where's the beef? And the market is now kind of discounted the Trump bump. And so what we have is a weaker dollar psychologically, but still lifted by interest rate increases over time.
Actually, in fact, you are right. We are seeing a bit of a downside move in US dollar right now, or at least the dollar index. We've seen a downside move in dollar index. Now, could this be now a shift of safe haven? Could this mean that we're going to be moving more money into yen? Could yen start to strengthen again? And could that be a concern for the Bank of Japan?
Well, yen is, if you look at dollar yen, it's not, dollar yen follows this, and dollar yen will be, the yen will be stronger. That's a temporary event. it's way above the threat of possible intervention. I mean, you could go. It's still a risk-on market,
Right.
because the market is still bullish, and the VIX is very low,
Yep.
and so there's very little fear in the U.S. markets. I'm not saying that's right or wrong.
Right.
So I see what's happening here is a great buying opportunity. Buy the dollar at the right technical point on a U-turn.
You're referring to the dollar yen.
I'm talking the dollar generally,
Okay.
and buying dollars generally, and the yen cannot stay strong,
All right.
just like even more than the GBP.
All right, just so that you know, don't jump on the computer right now and start buying dollars. Not quite yet. What Abe's really referring to is the opportunity may be presenting itself, and that's important right here. So we're seeing a great opportunity for possibly for the dollar to go ahead and hit bottom, hit support, but we have to wait for it technically. Now, if I look at the chart, we go to the chart right now. You take a look over here on US dollar. Take a look at the daily chart. You notice that on the daily chart right here, we don't have, all right, we don't have a bearish sentiment yet, all right? We're still in a bullish sentiment. So the market's been rallying, it's been rallying for quite a while, but we know that there is going to be a corrective move, and that's what Abe is referring to right here, and that's what I'm looking at too. So I am right on the money when it comes to looking for, and hold on, let me just get this, there we go. So now what we're going to do is we're going to look for this type of setup where the market's going to dip, and then we're going to see some rally. So when we see buy on dips, what we're saying is take the US dollar JPY, for instance, and wait for this corrective move. And if there are traders out there that want to trade those corrective moves, then absolutely jump onto the downside move, take advantage of this bearish move on the dollar right now, but be prepared that this is not going to be long term. It's going to be a short term dip for possibilities for an upside move eventually.
Let me make a point here.
Yes.
On the first chart, on the SSL, since it's there, you have to look at it in terms of the persistence, the ability of a price to close, to make new high closes, new day high closes.
Yes.
And you see the dollar has had a really big run, but it hasn't reversed significantly. So when you say corrective, I think that's because it's bullish in terms of the force, but it's bearish in terms of the psychology. So the market gets hit. So the dollar yen has been a great buying opportunity every time there's a rally, there's a bounce down and a bounce back up. Why? Because the big issue is you got an economy of negative interest rates.
Right.
It's minus 1%. You got a 10-year bond of 0. We're at 2.3.
Right.
So people holding 10 years are not getting paid for anything.
Sure.
So they are stimulating. They're getting some improved inflation, but the case for a strong yen doesn't exist. So the yen is a safe haven basket. Temporary, holds capital. Now why? There's trillions of yen out there being borrowed at zero rates practically, and they're going into dollar assets. So when they're going out of dollar assets, it's going back to yen. So it's a perfect example of why I believe long-term dollar yen is very bullish, but short-term you could look for buying opportunities.
Sure. I'm going to go ahead and take a look at a couple of other charts right here as we just line up the fundamentals and the technicals. Now, excuse me. I do know that you are a big believer on the wave count because it lines up with the fundamentals. Wave counts really line up. It shows us where the major turning points are, and it really tells us where the big fundamental forces are going to come into play.
That's right.
And so we're going to go ahead and take a couple of charts right here. I'm going to go to let's go jump to US dollar CAD. I know it's one of those difficult pairs with the CAD influence, but take a look right here. Once again, check there. Bearish sentiment. All right, bearish sentiment. Look for the market to drop back. US dollar looking to drop back to at least the support down here at 1.3585. So we do see some bearish movement that could possibly see this pair moving further down south, and this is just the beginning. This is just the beginning of the move. This is US dollar CAD.
Right.
Yep. And let's jump to another chart. So I'm definitely going to be a seller on US dollar CAD. Let's go take a look at and again, we're referring to between now and a week, 2 weeks from now, this is the type of moves we're looking at. Looking at, let's go, Euro JPY. We discussed this early on before you came into the show. We discussed the Euro JPY, and we've seen this rally this morning, but with a bit of weakness coming out in the US, and with the strength we've seen in the Euro this morning, it's starting to stall a little bit. And I'm thinking that there could be a turning point for this pair to drop south.
Well, there's two triggers for the turning point, Gary. The turning point is, first of all, that's a euphoria rally. That's a relief rally. Things in Europe are getting better. France and they're not going to break up, and that's a psychological rally. But it's overdone. The smart money has been the most net long money in the futures market in 3 years. So that may be the reason for this rally. So the point is, what's going to be the reason for the turnaround? You start seeing the yen getting weaker. So if the yen gets a lot weaker faster than the euro, it's going to push this up.
Sure.
So what you have here, strong yen is going to pull it down, but I see this as a sideways move. I don't see the euro yen being much more bullish because the strength in the yen has been pulling it down.
Right.
But so if you're betting on the dollar yen to go higher, this is making it complicated for this to go lower.
Okay. All right. Well, I'm currently short, so I want you to speak short. All right.
Yeah.
Speak short. Don't speak long.
No. I'm saying.
No, I'm just kidding you.
No, but I there's no disagreement here.
Yes.
I'm speaking to what you look for as signs that are encouraging to stay in that position.
Sure.
So So bottom line is, it's psychological euphoria. There are signs that cannot sustain itself just psychologically.
Will this help? If I tell everyone just to sell right now, will that help my position?
Probably not. But it's worth waiting because fundamentals are going to be in your favor.
Sure. All right. Well, Abe, thank you very much.
Okay.
What we can take from the students is, number one. All right. Let's take a look at and break it down. We got U.S. oil. U.S. oil, temporary rally at the moment right now. We should see some corrections in oil. In fact, maybe in the next couple of days, some corrections in oil. I've already looked at the charts, and I can identify that market will be looking to drop to about $46 a barrel, plus or minus, give or take. So we'll look for a temporary dip. I'm looking then for another rally to around about $50 a barrel. That means when this happens, we can look for Canadian strength taking place. All right, that's one. Number two, euro. Euro, we're looking at a possible, as Abe says, euro can't be long or be strong too long. So look for euro turnaround points. Look for euro to sell off. We are going to be looking at technical analysis tomorrow. We're going to go into a lot more detail in the technical analysis, and we're going to address exactly what positions are that we're going to take on and how we're going to be able to trade that. So euro, look for selling on euro. At least look for the turning points on euro. Pound is going to continue to weaken slowly. Nothing more I can add to that. Pound's going to continue to weaken. We have seen some sell-offs on pounds in the most recent days. So pound will continue to weaken. And then, of course, US dollar. US dollar has seen a sell-off this morning due to, of course, what's happening with the Trump tweets. And that's okay. We'll take advantage of those moves. So with all this information, we'll be able to take that information and start applying that to technical analysis. Again, tomorrow, we'll dig into a lot more deeper. Now, we're going to take a break. When we come back from the break, we're going to bring in Kevin Dixon. He's going to talk about the Ultimate Market Scanner and how we can be able to trade that. Abe, thanks for coming in.
Glad to be here.
That.
Thank you.
We're going to take a short break, and we'll see you in the break. Alrighty, traders, welcome back from the break. I have Kevin Dixon here with me today, and Kevin's going to be speaking about the scanner, the Ultimate Market Scanner. Now, the Ultimate Market Scanner has a certain way that you go ahead and scan trades and review exactly what type of trading opportunities you're looking for. Kevin, welcome to the show.
Thank you. Glad to be here.
Appreciate it. Thank you very much. Now, you're an expert in the Ultimate Market Scanner, and the one thing that I'm sure a lot of people have questions about is, how do you approach it? How do you look at the scanner, and how do you use the scanner to trading opportunities?
That's a great question. A lot of people that are coming in to use the Ultimate Market Scanner for the first time don't necessarily have a lot of background in trading. So the way that the UMS is built, it gives you clearly predefined entries to buy or sell. And there are a couple of different approaches that you could use to get on the path. Now, one is a system trader. A system trader follows the system, because when I'm using the Ultimate Market Scanner, Gary, the Ultimate Market Scanner is the expert. So me being a chartist like yourself, being able to analyze and create trades on our own, sometimes it's a little bit of a difference when you're sitting there trusting a system sight unseen without chart analysis.
Right.
But like any system, there are ways that you can improve on it. You could say, well, I don't agree with this trend direction, or these targets are too big, these stops are too big. And so there are some things that you could do with any tool that you started to use over time to maybe refine what you're doing. And I think on its own, it's an outstanding system, but if you know a few more things, you can make a few more pips, you can save a little bit more dime. Ultimately, again, at the end of the day, UMS requires no chart analysis whatsoever. But I found that for me, I would look at a trade and I'd say, hey, you know what? Why am I looking to short sell something that's so strong? Right?
Right.
Why am I looking to get long something that looks like it's falling down? Now, I'm not disagreeing with the way that the system works. It's just that knowing a few things, having an opinion of my own, sometimes I like to take the comparison of one to the two. So what I do personally is I have my best basket, which I have confidence in trading sight unseen, and I think that's the way that you take your approach to system trading. Because like with target trading, you could be in 10 to 15 positions at one time. And with the Ultimate Market Scanner, you could be in up to 28 positions at one time. So there are some currencies I just don't feel are as productive as others.
No, that's true. And the one way that I use the scanner, or I have used the scanner, is when I've gone ahead and scanned the market or used the scanner to scan the market, and I pick a certain currency pairs that I'm actually looking to have additional confirmations. I may not change my technical analysis, but I may use it as a confirmation that, hey, maybe I'm in the right direction. If the scanner's in the same direction, I'm trading the same direction, I've got all my wave counts, my targets, everything else in the same direction. It really motivates me to continue to hold that position.
Right.
So you're an expert in our hot picks. We have hot picks every week. In fact, every day of the week while we're running the session, we have hot picks. And in the hot picks, we have experts like yourself coming in and giving us the best trading opportunities that you see. Now, granted, traders, and this is something you've got to know, granted that I may be trading Euro JPY short. Kevin may be looking to buy it. And because we have different opinions about the market and we're trading different strategies, we may not be in the same direction all the time. And that's okay. So I just want you to let you know, if you are long or short in a particular currency pair, and we talk about a certain currency pair going in a certain direction, and it's not in the same direction you're trading, keep in mind, you may be a short-term trader, you may be a scalper. So the way we look at the market may not be necessarily the way you need to look at the market. But it is our opinion and only our opinion. Your decision is your decision. So don't let that change the way you're trading, the way you're looking at the markets at the moment right now. Use us as possibly another indicator. And if we say long Euro JPY or short Euro JPY, again, it is our opinion about what we see the market to do over the next few days, maybe the next few weeks. All right. So with that being said, Kevin, I know you're going to have a couple of picks that you have you're looking at right now.
I got a couple of great ideas to look at. And I always like to have the opinion that if your opinion is against my opinion, that your opinion is wrong. So there are going to be times that Gary and I are going to be on the opposite side of the trade, and at the end of the day, we're both right as long as we're trading our plan.
Yes.
If you have a plan to win, you have a plan to lose, you have a stop, you have a target. Even if you're going the wrong side of the way I'm going, that would mean that you're probably wrong at the end of the day. Now, I've got the hot picks. Really what we're going to do with that is we're going to take some of the best trending pairs for the day and look to see if we can find some ideas on it. Today, my hot picks are euros. I mean, euros are on fire. I've got a new pre-buy to talk about here to analyze with Euro CAD. Euro Aussie hit a couple of trades on yesterday, and we're looking good with that. And Euro Yen, this is what you and I were talking about a while ago. And we're on different sides of the fence here. He's on that side, I'm on this side.
Now, I may not bring you back on the show if you tell me Euro Yen buy, because I'm serious about that. No, I'm just kidding. No.
Yep, I'm looking at the Euro Yen buy. I think we're getting near some really clean breakout levels, and if we can start skating above 115, zoom. So,
all right, so let's take a look at Euro. I'm going to pop up Euro. I've actually got the scanner right now, and I've gone in and did some scans already, traders. So just so that you know, I've scanned some trades at the moment off a 240 time
right,
frame,
the 240 interval.
And we're going to go ahead and look for the Euro JPY. I'm going to go to show all time frames right here, and I've got the 240 right here. Here's the 120, but the 240 is the one that you're really looking at. And currently right now, it's long. It's been long 2 days. And the entry point was at 124.49 at the moment. The target is, well, they don't have a target. They just move their stops up, right? That's the strategy on this particular trade.
And if you go to the conservative button up there at the top, you can see where the initial target waves are. And I like to use the UMS as an idea generator in my plan as well. Placing those targets and placing those stops gives you guidance of predefined rules. And I think for new traders, Gary, this is something that we're always struggling with trying to do when you're new.
Yep.
Where to get in, where to get out,
Sure.
How do I advance my stop loss up correctly? What I wanted to talk to you about was that weekly. What do you think about that target up on the weekly? That trade began the week down a little bit. You see that yellow flashing indicator up
Yep.
there? That means that this trade just entered last week. So that's a pretty fresh idea here on those Euros. What do you think about that first target there?
Well, I like the fact that it's down in pips because that means the Euro JPY is selling off. But yeah, that's my own agenda. But okay, so you're looking at an entry price at 124.12. The stops at 119.46. We're looking at a target. Where's the base?
That's the 50%. That first signal
This
right
is
there.
132. Wow, that is big.
That's
All
right.
Now, this is what I want to do. 132. I need to counteract that. 132.31. Let's write that. Traders, write that down. I'm going to actually write it down myself. 132. All right, just because I forget.
We're big pip in here.
So 132.31. All right. Now I have to go to a chart and I have to look at this. 132. I'll be honest with you, dude. Seriously, I don't see this going to 132 without seeing some a sell-off first.
I agree.
Now, I don't disagree that it could not go to 132. I just don't think in the next few weeks we're going to see 132, and I think you agree as well.
No, we're talking about a position trade. This is
Correct.
a weekly time frame.
Right.
And the longest held trade I've ever held in the Ultimate Market Scanner, believe it or not, was Euro Yen and Franc Yen over a year and a half. Now, nobody out there in our audience is saying, I'm going to buy something that I'm going to hold for a year and a half. You must be out of your mind.
Right.
But that's how you make big pips when you're a position trader. The path to bigger pips is having a larger stop that just moves slowly up along as you're moving into the path of profits there. So I can agree with you looking at this saying 132, wow, because especially if your opinion is to short it.
Yep, absolutely. Well, let's look at the short term. Let's go ahead and take a look at the short term right here, and I'm going to go to the shorter term time frames, which is the 120, the 240, 120, more the 120 and 60 minute right here. We see that we're bullish on this as well. We closed the position there, but we're bullish on this. I see a target here at 124.14. Let's go back to the chart, 124.14. We've already hit that target, so that's already been hit.
Right.
So which means that targets have been hit in the short term, which could then mean some sort of correction.
Retracements, right.
So as the bulls start scoring points or traders start taking out their buy positions, we start seeing some sell-off of the market. This is what I'm looking for right now because I'm looking for a downside move in Euro JPY. I honestly, I still am. I find it hard to believe that 132 can come into play. It's not off the table, but it's definitely not something that I'm looking at right now. What I probably would do from a technical perspective is I would look to see the market coming back to retest this backside of this trend line right here, and then working its way back up north. Now this means that we're going to go to around about 120. 120. If I look at the 1 hour chart, this is the 1 hour chart right here. If you look at the 1 hour chart, you see a lot of these targets right here. And there's one thing about target trading that I really enjoy is that the market gravitates to these targets all the time.
All the time,
you know,
right.
it has a very high strike rate, which means that the market's going to come back to these targets. Take a look at this target right here, 120.78. This matches up with this backside of the trend line right here, matches up with this missed target right here. I see the market possibly before 132 comes into play, hitting 120 first before it rallies.
Well, I'll tell you what, you're looking at a 60-minute time frame. To be honest with you, on a weekly interval, a 60-minute time frame is noise. So, but
Yes.
When we're working within a larger time frame, what you could do is consider the waves for addition to
Sure.
the trade, or the waves to profit slowly within trade and building into a position over time. Now let's take a look at this from a weekly chart, Gary, if you wouldn't mind pulling up a weekly there,
Weekly,
where you've got that
me
greater
go.
gold. There you go.
let me just change here and just change this into.
That's some great TV.
Let me change it to a weekly chart right here.
But weekly chart, you get to see where these goals are actually coming more into the picture. And I agree with you. You know, for it to get to 132 could take weeks, could take months. But if you're up 500 or 600 pips in the trade, and now you're playing with the house money, you really don't care. Your emotion is removed. You could collect some coin along the way if you see it retracing. But you know, at the end of the day, when we're talking about a weekly decision, we're talking about longer term trading. That trade lasts typically 3 to 6 months before we start striking targets. So I agree.
Right.
You know, not every one of our traders out there is going to be treating it from such a long-term approach.
Sure.
But for those that do, and I know several that use that particular time frame, they just don't have a lot of time to look at charts, right?
Now you're messing up my charts right here by asking me to put up a weekly, but I say I'm going to do it for you.
Okay.
But
okay.
we're taking a look over here. Now you can see right here, I have the market taking out the previous high right there on the weekly. We had an indecision last week. We had a bit of a push above that. RSI midway, it's not sure where it wants to go right now. I am seeing a bit of divergence taking place. If you take a look here at the CMO, we're seeing the market pushing lower, we're seeing price moving higher. So I'm starting to see a bit of divergence taking place, which could also indicate a possible sell-off.
Well, you know, and to speak to that, I see a counter trendline break from the bearish trade to the left that just occurred.
Mm-hmm.
So draw a Fibonacci from that low on the euro yens over there to the left. Yeah, right there. Let's draw a fib from there and see what's
he's really
happening.
messing up my charts now.
That's right. Let's do it. Bring it, don't sing it. Let's take a look at some pippage.
To that high there?
Could you use the smart fib tool?
Oh, he wants to use the smart
Let's
fibs.
use an intelligent
He's one of those
Fibonacci.
lazy traders. He would like to use the smart
Hey,
fibs.
that's what technology is all about. Making it easier
that's true.
for
Hey,
you.
listen, I'm on board with I'm on board with you right there.
So now let's go take a look at that D extension up there, G.
All right, so we're looking at. Are you kidding me?
I'm not kidding you.
All right, 130, 152. All right.
Darn, it's close to 132.
But hold a second. Didn't we pull back to all right, pull back to a 786 right here? So we're looking at 127, looking at 127.
Yeah, yep. I'm going to
right.
go ahead. You're right. How about that? That's what you want to hear.
Absolutely. I've always want to hear that. All right, so no. Okay, so on a serious note. So currently right now on the Euro JPY, you're anticipating further rally. All right, we're looking for a corrective move. We're shorting the Euro JPY. We're looking for a corrective move.
Mm-hmm.
I'm looking for the Euro to drop down to about 120, and then maybe continue to move up. Excuse me.
And you know what? That works because it's within the stop that we were looking at on the euro yen. I mean, you're going to see
Right.
waves go up and waves go down.
Sure.
So it's totally allowable within that. But you know, I think that again, you can take a look at that D extension target and say, it's there. It's a reasonable target. If it's reasonable, it's achievable. And with us trading, you're trading a smaller time frame underneath this, we could both be right all day long.
Sure.
You know what I mean?
Sure. What other we've got about 4 minutes left. What have we got on other trades?
Well, you know, I got one that we're looking at right now, which is Euro CAD, and we can pull the Euro CAD up. We got a buy on the 480 this morning at $1.5102, and this one hadn't hit yet. So let's take a look at a chart here, Gary, and then compare the UMS rules. What do you think about that Euro CAD?
All right. So Euro CAD right now, if I have to look at the charts right now, I'm looking at, and before I go to the scanner, I look at the EuroCAD selling off. We're looking at the EuroCAD to continue sell off. This is just a corrective move, a relief rally, if we can call it that, and we're looking for it to sell off a little bit further down south. Now,
All right.
I'm going to go ahead and take a look at the scanner right here, EuroCAD. Move
That's
it up.
Euro Yen, right?
Oh, this goes that right up. Sorry, EuroCAD. There it is. There.
And there's the 8. All those trades around it are green. I mean, look at all the traffic moving down the freeway. Those are bulls.
All right. So you're saying, okay, now, granted, this could update and the
It'll
signal
update
could
at
change.
5. At 5.
At 5 o'clock today. The signal could change.
Well, it's going to get filled if it gets filled here.
It's going to be full, right. So the signals will change. Now, the students need to know this. If you're looking at a daily chart, or at least a daily scan, every day we have updates, all right? So if the target's hit, it's not going to show on the scanner yet, but it will show at the update at 5 o'clock.
With
or
the
5
interval
p.m.
alert schedule,
Right.
it'll show you that the order gets filled.
Precisely. And if I look at a 60-minute scan, every 60 minutes we'll have an update. And if the target's hit within that 60 minutes, by the time it closes, it'll give us the update on that.
Absolutely.
Okay, so you're looking at EuroCAD rally, at least continue. Now, just so that you know, I'm looking to sell EuroCAD. All right, I'm looking for it to sell. It'll be interesting to see how this lines up next week, and I know we're going to have you next week again for the hot picks. And I really want to pay attention. So I want to take note of this EuroCAD, EuroJPY, and let's revisit that conversation next week when we take a look and see how the scanners then scans for opportunity. And the reason why I'm saying that is because I use the SSL for direction and wave counts for direction. At the moment right now, it's telling me we're hitting tops. We should be turning around. We should be hitting south. I'll be real interested to see how the scanner sets up next week to see whether I am in the right direction, if we are hitting tops,
I agree.
and whether we start to see some selling opportunities.
Well, I'll be here next week and we'll check it out.
All
So
right.
thank you
Fantastic.
again. And it's wonderful to be on the varying opinion of something like that. We'll come back and see if we're both right.
The last one I'm going to give you is, what is the last pair that you're looking at right now?
I've been looking at the Euro Aussie here on a bit of a rally in the last 24 hours. I'm also looking at the cable. I constantly breathing the markets like you, but
Sure.
Euro Aussie, I'm looking to build up into some larger time frames.
All right. So Euro Aussie, long Euro Aussie?
Yep.
Okay, good. All right. Well, that's it from Kevin. Kevin, I really appreciate you coming in.
Thanks
I'm
a lot,
looking forward to having this debate again about what the scanner's giving you as trading opportunities and how we're looking at it from a technical perspective.
Right.
Because the scanner's not technical. It is,
It is
although
technical.
it's using certain indicators to create this technical setup. But I'm talking about from a manual. We manually manually trading, and we're doing technical analysis manually. And based on how we've seen things up, based on how the scanner's seen it, it's a nice comparison to be comparing the two. So that's great. I'm glad you're here.
Thanks
I'm
a lot.
looking forward to seeing you and seeing a little bit more of your controversial trades.
Okay, let's bring it.
Let's bring it. All right, great. We're going to take another break. And when we come back from the break, we're going to bring in Jared, yes, the FX chief, and we'll have Tad. Some of you know Tad from the briefing room. We'll have both of them in after the break. Alrighty, traders, welcome back here at the inner circle. This is the last segment of the day. I've got Jared Martinez with me, and I have Tad with me as well. And everyone knows Tad from the Power Fibs as well as the briefing room, and as well as ETR. And we have the FX chief. Everyone knows the FX chief. He doesn't need an introduction, does he?
Well, I knew one day they'd put me in the movies, and now I'm in the movies, so I'm pretty excited about that.
Well, that's fantastic.
How's that song go? Ooh, they're gonna put me in the movies.
Yeah, that's right.
Gonna make a big star out of me. Okay, all right.
Chief, we've had Abe in the room. Well, in the show, we've had Abe, we've had Kevin. We spoke about the fundamental moves of the market. We spoke about how the scanner could set up trading opportunities, and he was completely in the opposite direction as me. But we also discussed how traders can have different opinions. And even though I'm selling EuroJPY and Kevin's looking to sell EuroJPY, buy EuroJPY, we have different opinions as traders. And I know you trade differently than I do. Tad trades differently, although you may trade a little
The
bit
two of us
similar,
trade
right?
pretty similar.
Yeah.
And Josh trades a little differently. Tyson trades a little differently, and I think that's why this inner circle is so important, because the markets are constantly changing, and as they're constantly changing, a large part of everything that has been created has come from changing markets.
Sure.
And I got to tell you, we talk about it here, but daily trading ranges are probably some of the smallest ranges I've seen in my trading career. And so, as the saying goes, necessity is the mother of creation. And so Ted and I were just speaking on how we could help our clients by creating some indicators that we'd pass on to the clients to help them in these choppy times.
Are you working on something right now?
Yeah, we're working on something right now. I don't want to pop it out of the bag, but it certainly is there to help traders with these small trading ranges.
And we're definitely going to bring you back on the show again, specifically to speak about that and find out exactly what you're doing, get the inside scoop as to what it is.
Yeah.
That's great, fantastic. Now, we didn't bring Abe onto the show for his beautiful looks,
Okay.
and nor did we bring you on the show for your wit and funny jokes.
Okay.
We brought you for your experts, right?
Okay.
Your expertise, and your expertise are in trading the market from a
Okay.
technical perspective. What do you see right now? How are you going to be approaching the summer from a technical aspect?
Well, just so everybody knows, trading ranges at the first quarter of the year are always smaller than the second quarter. And the third quarter is small, just like the first quarter. We're going to get some movement.
Sure.
You know, it's just not going to be as volatile as it was in the second quarter or the fourth quarter. You know, and so what you want to do is you got to prepare for it.
Absolutely.
And so that's where Tad and I were talking about, I think if we created this to help our clients really understand how they're going to deal with these small daily trading ranges and how they can capture pips, because, you know, we have a goal as a company to help all our clients capture 1 million pips this year.
That's right.
And so, you know, we want to participate in helping our clients achieve that goal.
Absolutely.
But, you know, summer months are going to be, nothing's 100%, so I can't say that it's going to be 100% slow. You know, all it could take is one crazy thing to happen in the world, and all of a sudden these markets are going to all of a sudden turn volatile again.
Now, when you say crazy, do you mean Trump go ahead and tweet?
Well, it could be Trump tweeting. Trump tweeting doesn't seem to be a major movement in the market.
No.
You know, it's like him throwing a pebble in a pond.
Yeah,
you know?
all right.
Because it's every day, and
Right.
it's every day, every few hours, and
Yeah.
it's nothing. No, there's no more shock factor involved anymore.
You're right.
So, you know, I think it's going to take, you know, Kim Jong-un doing something crazy, them making a decision about Brexit, you know.
Sure.
In the euro, they still got the quantitative easing, $60 billion a month. That's still very active, you
Right.
know, until, you know, we got to watch interest rates. One of the reasons why, too, daily trading ranges are so small is because there's no variation in interest rates around the world.
Sure.
I mean, what are we looking at? 1 to 1.5% difference.
Right.
You know, a few years back, we were like 5 points, 6 points difference.
Sure.
And that's what created the volatility between the currencies.
Yep.
Because it's, you know, it's called flee to safety. If some countries offering 6% interest rates, you know, you're going to have all these funds shifting their money over there, maybe getting out of the stock market, putting it in gold, putting it in perhaps to New Zealand if their interest rates are sitting up there at 6, 7, 8%, you know.
Sure.
But nobody's there
Yeah,
right
right,
now. So and so it makes the market real flat. You
Yes, it
know,
does.
The biggest moves come off of interest rates, you know, and non-farm payroll, but we haven't seen that much lately either.
No, it hasn't made a big effect in the market at all.
Right.
Now, Ted, I want to shift over to you. Ted, for those that don't know, Ted is one of our experts in the Power Fibs, and we're going to bring Ted on board every week, right?
Mm-hmm.
Every week, I think it's on a Wednesday. Every week, we have you tomorrow as well, but
Yes.
it's normally on a Wednesday.
Right.
This week's a little different, but every week we're going to have Ted coming on board, and he's going to be discussing Power Fibs and the setups and the trading opportunities based on Power Fibs. Now, Ted, based on what you're looking at right now and how you're going to be addressing the market, because obviously in the summer, as Jared just said,
Right.
the market's going to be a little bit tighter ranges. We're not going to see big moves happening over the summer. Are you going to be approaching the market from a Power Fibs point of view, or are you going to start looking at more like counter line breaks, 1, 2, 3 setups?
You know, power fibs I find are very reliable. The thing is, it's going to take a little bit longer to hit your targets these days. When we have trading ranges sub 100 across the board, 50 pip daily trading range averages 60, 70 pips. Some are below 50 pips. The reality is, if you're on a 2-hour chart and you're trading an AB swing that's 300 pips, it could take you 3 weeks, a month for it to hit the target.
Yeah.
So the key is patience in the summertime. I mean, you can set the power fibs as long as the market doesn't take out your A. As Josh says, it has no choice but to go your way. And it's just a matter of setting it for letting it ride. It may take you a month, maybe even 2 months, but as long as the market's still moving your direction, you're going to be successful because it's not taking out your A. It may take it a while to come down and hit your 618 or hit your 50 retracement. But the nice thing about the Power Fibs is once it's set, you don't have to do anything for it. It just goes and takes your trades as the market hits your retracement, and you hit your D extension, the next one deploys, and you keep on trading up until you hit your larger time frame D.
Are you looking at any particular currency pair that you focus on? Maybe like trying to sell the Euro JPY right now? No. We're just bouncing back and forth, me and Kevin Dixon, about the Euro JPY.
The yens have been my favorite currency pair of the last month or two because if you look at any chart, those have the nicest looking trend. They're not very choppy. They're not very volatile where it's taking out your A's all over the place. They have nice trends, and the trend is your friend. And so I really like the yens currently. Pound pairs have been pretty volatile lately. They've been all over the place. A lot of A's have been taken out on my GBP pairs. Okay. So I found the yens have been pretty reliable as of now. But as we know, just because something's reliable this month doesn't mean it's going to be reliable next month.
Yeah, absolutely. Mm-hmm. Absolutely. Chief, with Brexit, with Trump's tweets, is there any particular pair that you've got your eye on right now?
You know, I have to be real upfront about this. There isn't.
Yeah.
You know, what I'm looking for is, you know, when you look at the markets, everyone, have you ever thought about compressing the markets and seeing if they are moving in a smooth ABCD going up or in a smooth ABCD coming down? Or are they just like whippy-lashy all over the board? Because if they're whippy-lashy to you, you really need to stay out. You need to stay out of the market.
Sure.
And you know, we used to only have like a couple pair that were whippy-lashy, but now we have, Ted, how many would you say we have out of 21 pair? We probably have
I would say near 50% at least.
50% are whippy-lashy nasty. Mm-hmm. And, you know, I've learned it's better to be out of a trade wishing you were in than in a trade wishing you were out. And, you know, sometimes your best trade is no trade at all.
Sure.
You know, if there's no deer, don't shoot the rifle.
Right.
Yeah. You know?
Absolutely.
And what happens is you go shooting your rifle all the time when there's no deer, and then all of a sudden the deer show up and you've used all your ammunition. Mm-hmm. You know, you've wiped out a large part of your trading account. And so that's what I'm excited about this platform, because every week we're going to be addressing the hot pairs and how you can trade them and how to take advantage of them, because every week there is not 21 currency pairs you can really trade. I mean, you know, they say lawyers love to sue, you know, teachers love to teach, doctors love to operate, and traders love to trade. You know, Ted and I can find a trade anywhere.
Yeah. Right.
But, you know, right now, even a lot of 1, 2, 3s are just getting stopped out. And you know you're experiencing this, and so that's why Ted and I have been talking about something we could introduce that could really help our clients out.
Right, fantastic. Let's just take a quick look at the spreadsheet that I put together right here. And this is a spreadsheet that I put together based on different setups that we're going to have in the market, just so we can, from a glance, be able to tell whether there's a trading opportunity from a trading perspective or a counter move. And so I put up the spreadsheet right here, and if I look at the spreadsheet, you see the short-term SSL there, the ones that say stand aside? Well, those are actually opportunities we're waiting for, and there's quite a few lined up there. I'm going to just take the one, the pound US dollar, and I'm going to go to the actual chart, pound US dollar chart, and I'm going to take a look over here, exactly what this sets up. And I want both your opinions on this, because you guys are experts in this as well. Firstly, number one, on the daily chart, we're seeing the market rally up, but you can see that, and I'm going to zoom in a little closer up so all the students can see that. And we can see right here, the market's starting to come back down. We're starting to see a downside move in the pound. So pound's starting to weaken a little bit. It's not confirmed yet, because what the SSL chart does, it confirms when we have when the market has the ability to close lower for that particular day. And it hasn't closed lower yet. So which means that it's not confirmed yet. But if I look at the chart right here on the 1 hour, we can see that the market's starting to look to sell off below these pivot points. If I actually compress the charts and show you from a bigger perspective right here, let me compress the charts. You see how these lines, these targets right here, act as support and resistance for the market. So when we start seeing the market trading above these targets, that means we're in an uptrend. And what's currently happening right now, the market's starting to trade through those targets, so we're starting to see a U-turn back down south. So sentiment is starting to change, and we're starting to sell off. I'm going to say that these pairs that I have labeled over here are good opportunities are coming up soon that we may need to pay attention to. Pound US dollar, sell off on pound US dollar. We're looking for pound CAD, possibly a move on a pound CAD, a sell there. Pound JPY, pound New Zealand dollar. These are all the pairs that actually have rallied over the last few weeks and are starting to hit tops and starting to run out of volume. And these are the short-term opportunities that me particularly is going to pay attention to. And is there any pairs that you have that you've maybe hit a larger de-extension on that could be setting up that type of setup for you?
Well, I'm going to say this. Every week, and that's why I think this platform is going to be great, because it just seems like, there was a time to where the dollar pairs were the ones to trade.
Right.
Because they were all set up to move in a certain direction.
Yes.
And so they were the best time to trade the dollar basket.
Right.
But then when they all retraced back to their numbers and we got the bounce, then it was every currency for itself.
Yeah, right.
And then you had a few announcements from Brexit still coming in and from Europe, and then everything got out of whack.
Sure.
I like Tad's approach right now and focusing in on the JPY. I too am focusing in on the JPY pairs because they are not whippy lashy nasty. They run very smooth.
Right.
You can count on their Fibonacci's to work.
Sure.
There's certain pairs that are just super great for the power fibs. And, but I'm also seeing that traders are using a combination of
different strategies?
They'll use the 618 entries, and especially with the target
Trading?
Target trading, that helps them move. And the other one that I think is a really great setup is gee, I forgot. Now, listen, I'm old, so I get these senior moments. They have no excuse. I do. The grid trading that's being created right now. Let me tell you that. The number one thing everybody has to determine is trend direction, and we get trend direction based off a larger time frame. So if you can understand trend direction, that grid trading is going to be phenomenal.
Absolutely.
And especially if you take the grid trading and mix it with, mix it with target trading. That's also a great. Those two are great.
Absolutely.
Which two do you think the grid trading would do good with?
Well, the grid trading at the moment right now, what I like about the grid trading is the fact that we've got that matrix tool available. Because in target trading, as you just mentioned, in target trading, we do apply a cost averaging strategy, which we use in target trading. Now, for the students in the inner circle, we're building up a strategy that we're going to be trading in the inner circle that also involves cost averaging.
Right.
And we're going to use that same matrix tool for applying trades, and it's going to make the job a lot easier to place these trades. So I love the grid trading class. It comes with strategies, but at the same time, the tool, the matrix tool, is unbelievable. It makes my job a lot easier. And we're all about working less, all right, and earning more money, right,
Exactly.
as traders. So that's good. Chief, to move on to, I know you're very well known for bringing the psychology to trading and introducing the psychology into trading. And in fact, that's one thing that I've always listened to, your mentorship programs. I love those mentorship programs. It really puts me back on track again, especially when you're going through some tough times. I mean, there's traders right now, based on the market conditions, they may be struggling and being whipsawed in a lot of these range-bound trading areas. It's tough for traders, and the psychology really takes a beating. How would you share your thoughts with them?
Traders, I'm going to tell you that, when you pray and you ask for patience, the only way you're going to learn patience is to go through something that you have to be patient about. And so the fact of the matter is I think all traders right now are learning how to deal with patience.
Yes.
I think all traders right now are learning how to deal with frustration with these markets not moving. Some traders are used to trading 5 or 6 currency pairs at a time, to where now we're down to probably 2 or 3 good ones at a time, and that creates frustration. Some strategies are stopping you out more than you want to be. That creates anger. And when you start to get frustrated and anger, and you start to see your disciplines not performing the way they should, because now you're just starting to take risks and you're starting to get a little out of control. This right now is the time to be in most control of your emotions, and because if you get angry, you will perform on anger's terms. If you get frustrated, you will perform on frustration's terms. And if you get desperate, you will start to perform on desperate terms. And we already know what happens when desperate people do desperate things. And so, I love the way Gary trades, but it's long term. It's very long term, And so, he'll go 2 or 3 weeks without a move, and then all of a sudden, boom, the big move hits. And so, all traders have to really look at their methodology and see if it is in alignment with how the market is moving right now. And like I said, Tad and I are working on things that we think could help, participate in scalping these markets, because a lot of traders now, I used to say, now I believe in still checking the charts 3 times a day. A lot of the fibs are still working, but as the saying goes, it could take 3 weeks. I've seen some charts take 3 weeks to almost a month to get back to a 618, not to mention how long it's going to take to go up to the 1.618.
Sure.
And that's awfully frustrating. And so, it's everybody being frustrated, but you've got to stay the course. You have got to stay the course. I love what George Bush would always say. Wouldn't be prudent at this juncture. It wouldn't be prudent at this juncture. I talk like his son now, So anyway, it wouldn't be prudent at this juncture to start creating your own methodology. The one thing you want to do before you go create something, you better back test the living daylights out of it. But Tad, had mentioned. And right now there's some currencies that are 50 pips daily trading ranges.
Yeah.
It's almost like,
it's not even worth looking at it.
Average stops are 50 to 70 pip stops. And so some people go a little more, but if you're putting in 100 pip stops to go for a 3-for-1, then I really believe you better stay away from the 50 pip daily trading range.
Right.
You're gonna get stopped out on those smaller daily trading ranges.
Right.
Look for the larger ranges and trade those, because even 2 months ago all the GBP pairs. They were bringing in 350, 325 daily trading ranges. Now they're down to 1 1/4.
Sure.
It's almost like, I'm not suggesting this, but it's almost like you could get in and not even put a stop, because your daily trading range is going to be your stop.
Right. Absolutely.
But at all times trade with a stop. That's how you get in trouble if you don't trade with a stop.
Yeah.
But it's knowing where to put those stops. And I think the greatest part about this platform is that we're going to be talking in this platform about the good trades for the week.
Yeah.
And that's why you need to be a part of this, because we're going to focus in on the great trades that are taking place. And we're going to be bringing the experts in here. Let me tell you, if it's challenging for us, just imagine how challenging it is for you. But we've been at this for, you've been at this almost 20 years. I've been at this almost 70 years, 9 years, 10. I've worked with these guys for years, and we've seen small daily trading ranges, and we've seen large daily trading ranges. And the neat part about it is when you're watching the experts and see how they look at the charts, manage the charts, and bring to the table, hey, look at the way this market is, here's the top picks of the week.
Sure.
That's going to be important to everybody.
Absolutely. And to add on to what Jared just said right here, it's not about just my opinion, it's about the experts' opinions and having everyone's opinion involved here. Because when we look at the inner circle is about bringing these experts to the table, but presenting trading opportunities. And hey, there might be Tad or Chief or maybe Tyson or even Josh coming in with a trading opportunity, and I'm going to challenge them. I'm like, man, why do you have that trade? Why are you looking at the trade? And they're going to give you the inside scoop as to why they're looking at their trade. It's not just going to be I'm buying here, selling there. It's why I'm buying there, why I'm selling there. And I think that's important to be able to get into the brain of the expert and to figure out what's he thinking behind the trade. Chief, now you've got a lot of good jokes. You got a lot of good jokes.
Yeah.
Do you have one for us today?
But I want to just say one last thing, everybody, and that is, I can't overemphasize, hopefully you've enjoyed today, but I can't overemphasize the importance of coming in here, especially with the small trading ranges, and listening to the experts on what they should be doing. We're going to have Josh as an expert, Abe as an expert, Tad as an expert, me as an expert, Gary as an expert. We're going to have all kinds of serious traders that, even look at all the trade copiers that who trade money and have people following them. So, we're real serious about this. And so it's our focus to help you make money. Now, my joke, okay, this guy, 80-year-old man, goes to the doctor and he says, for a checkup, and doctor says, well, you look good. He says, everything's good He says, how's the missus at home? He says, Doc, I think she's turning deaf. He says, what do you mean you think she's turning deaf? He says, well, she doesn't hear very good. Well, why don't you bring her in here? Oh, she won't come in here for a hearing test, trust me. He says, well, then you have no choice than to you test her. He says, this is what I want you to do tonight for dinner. Stand about 40 feet away and ask her, what are we having for dinner? See if she responds. If she doesn't respond, move to 30 feet. Say, honey, what are we having for dinner? She doesn't respond, move 20 feet. Honey, what are we having for dinner? She doesn't respond, move 10 feet. Honey, what are we having for dinner? She doesn't respond, walk right up to her and tell her. So that he goes home and he does that. Honey, what are we having for dinner? At 40 feet, 30 feet, 20 feet, 10 feet. Finally, he gets up right next to her and says, honey, what are we having for dinner? She says, for the 5th time, we're having chicken.
That's good.
So all the time, he's the deaf one.
I heard that for the first time when we were doing that podcast, and I tell you something, it resonated for me the rest of the week. It was pretty good. I like that. All right, traders. Jared, firstly, thank you very much for coming. I know we're going to have Jared joining us every single week. I think it's on Thursdays. Every single week Thursday. Mind over markets. You're going to be discussing the psychology of trading, which is going to help a lot of these traders be able to get through those tough times. I know we're going to have Tad in once a week. Tad's going to be talking about the power fibs, the trade opportunities that he's looking for at that particular time. And again, it's once a week, so we look at constant changes. We also
and different strategies that help
the power fibs
pull this together.
Yep, absolutely. It's not just the power fibs, but the strategy behind the power fibs too. Mm-hmm. Also, we're going to have hot picks. We'll have Jared coming in for a hot pick. If Jared's got a good hot trade that he's looking at, we'll bring Jared in for a hot pick. We'll bring Tad in for hot picks. We're going to have experts all over the globe. And when I say that, I'm actually lying to you because it's not the globe, it's here in the US. But we're going to have experts from Tyson's going to be in here, Josh is going to be in here. We're going to have Tad, Abe, Chief, you name it, we're going to bring them on board. Traders, the one thing I want to go ahead and leave you with right now today is we're going to kick off tomorrow and we're going to get into some live trading. I said to you right in the beginning, make absolutely certain that you come prepared tomorrow, because again, traders, this was just a soft introduction to what we're going to be doing for the next few couple of days and as we head into the following weeks. Soft introduction. Remember, bring yourself prepared, ready to go, because when the trading opportunities come, you want to be ready to go ahead and take action. Again, the trading, the inner circle is based on creating trade opportunities. You didn't come here to hear my awesome South African accent or the funny jokes from the chief or Abe's beauty, right? You didn't come to see Abe's beauty. You come here to specifically look for trading opportunities, and that is what we're going to be delivering. Trade opportunities every single day. The experts will be coming with trading opportunities. It's going to be a whole bunch of jam-packed trading opportunities. Traders, it's all about the pips, right? Chief?
Well,
closing words?
I just want to say that make sure that when you come back and you watch this, because we're going to have all the